following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a exciting trading week. My name is Mark Longo from theoptionsinsider.com, and I will be your host for this truncated roundtable. So far, it's just a roundtable of two, but we should be adding additional seats to that roundtable momentarily. But nonetheless, I am joined by the ever-resilient, ever-faithful Aunt Mike Cavanaugh from Know Your Options, Inc. Aunt Mike, how has your week been so far? And by all means, give us, our concerned listeners, an update on your Pinky saga.
Absolutely. Pleasure to be here again, as Uncle Mike is still out in the mountains. I thought we were going to go with the Grandpa Mike moniker for myself, but it seems like Aunt Mike stuck.
If you prefer Grandpa Mike, or perhaps maybe we can work out something else, but Aunt Mike is a little bit, I don't know.
It doesn't fit, it just doesn't fit. But so we've had a busy week. We like on the last show we mentioned we were moving on LinkedIn. We took a look at silver today, and we liked it. So we're it's one of it's always in our arsenal, but it's moving again. So took a look at some silver, but yeah, just in general been busy. And thanks to all the Options Insider Radio and Option Block faithful, that the huge outpouring of love that I got for my finger situation. The listeners' outreach with calls and cards and letters and chocolates and get well soon.
And the money. Don't forget the money.
Yeah, right. No, actually nobody called. So it just makes me feel that nobody cares about my dislocated
You
pinky,
died a little bit inside, I know. But
yep,
that happens to all of us. That's what happens after your first appearance on the Option Block. You die a little inside, and then you get a little harder, and you go on from there. A little sterner.
Yeah, no, it feels like, I just kind of got thrown in the deep end of the pool here. And, everybody's like, well, that Kavanaugh guy gets on there, he's whining about his pinky. We don't care. We want options ideas.
So, Mr. Seabass, I'm glad you can join us. I hear the melodic sounds in the background. I hear you are watching the little Seabass.
Yep, little Mark, as we like to call him. So I am watching him as I speak, and currently what he's doing is playing with a Victoria's Secret bag. I'm sure perfectly fine.
Yes.
There's nothing in it, don't worry.
I often find young children to be very conducive to radio and podcasting. It often helps. Sometimes I'll stick my little guy.
Absolutely. Well, you know what? If he starts to get loud, I've got some plastic wrap to let him play with.
There we go.
Sure nothing
I'm sure there's a knife drawer as well, or a lighter.
No, the knife drawer. Yeah, no, that's true. I'll whip out a couple knives that he can mess around with.
Don't you have some stairs he can climb around on? That'd be good.
Well, no, we do have the fireplace, though.
Yes.
All right. And since we are still awaiting the boys over at OX, who are apparently have been chased out of the building by a fire drill, so all sorts of fun havoc going on today. But with our team partially assembled, we will roll right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. And it was another intriguing day on the street, if nothing else. We saw good old Uncle Ben talking down the markets again today and spooking everyone. So we had another mild sell-off on the street today. S&P closed down nearly 9 handles to 1308, nearly 1309. The Dow closed down 54 to 12437. Good old NASDAQ down 34 handles to 2762. And the VIX cash coming off a little bit from its highs earlier in the day, closing up nearly about 0.9 to 20.8. So a mild sell-off across the board today in the broad market. Uncle Mike, you guys are, I'm sorry, I shouldn't call you Uncle Mike, because that would confuse some of our listeners.
That's Aunt Mike. That's Mike.
Aunt Mike. He's asking to be called Grandpa Mike, so I might switch him to Grandpa Mike for niceness.
Well, what about crazy Uncle Mike? That way we'd be able to differentiate.
Crazy Uncle Mike. How are you with that, Aunt Mike?
Either way.
Crazy.
I don't think the aunt fits. It's the wrong message. I know civil unions are legal now, but it's sending the wrong message.
Okay, crazy Uncle Mike. What were you watching? Were you guys sitting there glued to good old Uncle Ben's testimony today?
I could honestly say not really. I mean, there's been times where we've got CNBC on in the office, and we'll turn around if something's said, but nothing. Nothing really turned our heads from what he was saying today. We were more fixated on the last 2 days on the S&P. You had a higher open and a sell-off into the close. Higher open yesterday, I think we were up 14, 15 points at one time, and we closed up 2. Come in this morning, we're up close to 8 points on the S&P, down 8 at the end of the day. And what has us kind of looking even closer is it's been low volume. So you get these low volume high pushes, and then you get the sell-offs, and it just says, why are we up at 1308 right now? Is it justified, or is Uncle Ben on television scaring people, and do we rally out of this? I don't have the answers, Marks. I don't have the answers, but
here's what I'll say is there's some things I really, really don't like that I'm seeing right now. In a market where things look safe, when the S&P hits higher highs, the VIX hits lower lows. And when the S&P hits lows, the VIX has higher lows, or higher highs, And we're seeing just the VIX is reaching elevated levels with little to no movement in the S&P. On top of that, you can't even buy U.S. debt because we don't know if they're going to get downgraded. That's probably the number one explanation for any strength in the euro and any power in gold and silver. There's nobody wants to buy treasuries. Nobody wants to buy stocks. So what do you see? You see a VIX product that's rallying pretty aggressively, especially given the movement. If you consider that we couldn't break 19 the last time we broke 1,300, and now we're breaking 21, and we're 10 points past, we're trading 10 points north of 1,300. It kind of tells you kind of where the market is. There's a lot of fear. And, rightfully so. If any more positive debt deal, or if any pin drops in Europe, we're heading south. I'm noticing, and I said this, I think, on Monday, nobody is selling premium into this downturn, unlike the last time. So I am currently a buyer of VIX calls and call spreads in the short term. I think the July 21, 22.5 call spread with the VIX at 2080, you could buy it for 35 cents. Payout of about, 4.3 to 1. And basically all you had to do was agree that there was less than a 23% chance that less than a 77% chance that the government was going to get things done, and the odds move in your favor pretty quickly. So I really like that. That's one trade I really like today, and I wrote about it on the street.
Yeah, that went out. I'm looking at it now. Went out 30 at 40. You got basically a weekly upside call spread at this point in VIX. But yeah, week is all you need if all of these negative developments come to pass.
Well, I mean, all you need is as this government debt thing drags on, you're going to see implied vol rally. Just what it comes down to.
Yeah, and what the VIX measures is fear, right? I mean, when you just keep peeling back the layer on the onion, it's an emotion indicator, and when people start getting fearful, you start seeing the VIX go up. We were looking at the VIX chart. You pull up a 5-year monthly chart on the VIX.
Mm-hmm.
I don't know if you guys recall February 26, 2007. It was that first weird day. It was almost like the Rubicon, so to speak, of the VIX. It had that 50-point down day, and people were pegging it to the yen carry trade unwind, and the S&P went down 50 points, and then what it did is it constituted probably the largest rally of the leg up to new highs. It started that April to May. We went from 1380 on the S&P up over 1480 in about a 4 or 5 week time period. That was like the first hiccup. And then we went into August of the same year, and we had another. It was like the levered 110-10 hedge funds got unlevered pretty quick. And we had that goofy sell-off in August of 2007, and the VIX popped again, and then it let go. You had the SocGen unwind in January, and then all the volatility came into the market. It stayed in the 30s, and then boom, October of 2008, it went nuts. If you look at the VIX chart, you do an overlay of April, like the flash crash, into, and you just overlay that on the 2007, the flash crash, the spike. You could look at it, it almost matches up with that spike in February. Then you had the tsunami spike in mid-March that didn't quite get as high as the flash crash volatility, but now we're seeing this climb kind of similar to, you had 2 big spikes in vol, but the market hasn't come down, and now we're seeing like a little bit of a buildup similar to the early weekends in September of 2008, where you had 2 big vol spikes in the months leading up to it, and then you had a wind up, and it feels like we're winding up again.
Yeah, I don't know. Here's what I know is that I'm not liking owning a lot of stocks right here. I'm a put buyer, and I'm strongly encouraging many of my students to avoid some of those. Even though with that VIX of 21, selling premium may seem set like a smart, sexy idea, it's probably not the most brilliant idea right here. That's just me though.
No, we were looking at a lot of different positions today in Ford and other areas, and areas where we would be traditionally premium sellers, and yet I think everyone, myself included, is just a little unsettled at these levels right now. I've been bearish for quite some time, but I agree with you guys that it does seem to be teetering on the brink of worse.
You're bearish because one of your grandparents was, in fact, a bear.
Indeed.
Isn't that correct?
Indeed. I do come from solid bear stock on my mother's side.
Well, that's actually Mike. I don't know if you know this. That's actually one of the big tensions with Mike Tucson and Mark Longo is that, Tucson, famous for killing bears with his bare hands. Mark Longo, famous for being a bear. So
right. Well, Tucson, his book, Go Long, right? It's like long-term strategies. He's bullish. He's long-term bullish, short-term cautious. So I think the three of us, in our office here, I'm the bear, Tucson's the bull. When in doubt, palms out. We're all floor traders.
Yeah, when in doubt, palms out, indeed.
That mechanism of I don't buy it, I don't believe this rally, and we've always played the short side. That's what floor traders, that's our MO. That's what we're hardwired for.
I agree with you 100%.
I was just going to mention that. I was just going to mention that to you too, because I know Tucson late on the show has been leaning toward the bullish side of the equation.
I know. That's
I was kind of wondering how that dynamic played out in the KYO office with you being obviously bearish and Tucson, starting to talk about. We were talking a week or two ago about the 12.5 1300 strangle. He wanted to get long that 1300 leg, and he was still bullish up here. I'm just curious. So, are you guys positioning again for a downturn? I know Tucson's cost issue. He's got collars on everything, but
that's basically. It's just a question of how tight do we make the collar, and how bearish are we going to get? Is it a 10% correction, a 20% correction? We've got George in the office too, and George is like a bull here as well. He was showing me some charts today of 1995 when the government shut down for 8 days, what the market did afterwards, and then they shut down again in November. for 5 days, and the market came out of those government shutdowns in '95 full steam ahead. Now I know the fundamentals have changed, but is a government shutdown bad for the market? I don't know.
Yeah, the fundamentals are a little different than they were in the mid to late '90s. I would say that. But no, I do agree that there is. This would be kind of a relief rally to the nth degree. I mean, the entire thing, the entire mechanism, kind of the foundation of this market is that the U.S. government isn't going to default and isn't going to really cause problems. You start messing with treasuries, you start messing with basically everything, the entire system. So that's kind of my thought process on why this is such a huge deal. I don't think you can downplay the risk of a default here. I mean, it would be there. I mean, forget 30, we might see 35. If it happens for any more than a day or two.
There's always two sides of the coin. So I sit here and go, I agree with you. The uncertainty of what it means to default is definitely scary. But George in our office made a really good point. Like, are we really at risk of default, or are we using the term default to rattle some sabers to say, hey, look, we want our deal done. We're concerned about getting reelected in 2012, right. So we're gonna saber rattle. Default is by definition the inability to pay down your debt. Well, we don't really have the inability to pay down our debt if we cut spending. If we cut spending in some places, we'll be able to pay down the debt. And default and spending too much on things that aren't as important as not going into a default is really the issue, and that's not what's being addressed. What's being addressed is, hey, you have to go our way or we're going to default. Well, essentially what it is if we cut spending across the board to pay down our debt, we're in a good spot.
Yep, couldn't agree more.
We need somebody to say, hey, look, I'll be a leader and I don't care about re-election. I'll cut spending.
Yeah, I'm voting for. Mike
good luck
Kavanaugh,
finding one of those. There we go.
I vote for Mark Longo.
President of the United States.
Mark Longo.
Well, crazy Uncle Mike. I know one of the things the other non-crazy Uncle Mike likes to talk about on the show quite a bit are the metals, and that's probably one of the few areas of your portfolio today that was looking to the upside. You saw gold and silver both up today. So are you managing the metals portfolio while Uncle Mike is out of town?
Yeah, we did a little adjusting, so we saw a big spike in gold the last couple of days, and we have a collar on gold, go figure. But we ended up taking a loss on the short calls, rolling them out the next month. So we don't make as much being having a covered call and a collar on, but it did well. We also got excited about silver. You saw a big push in volume coming into SLV, so that caught our eye, and we looked at. Similar to that LinkedIn strategy we did last week, a stock replacement, where we're looking at the January 32 calls. If you've got $100,000 in your portfolio, putting 1.5% to 3% in silver just outright by buying the Jan 32 calls. So we were looking at that today. Speaking
of LNKD, it's had quite the range since we talked last on Monday. It's been all over the board, south of 100. Up to 110. It's been. Are you guys back in at all? Or are you still waiting to get back in?
We're waiting. I've got the 97 area pegged, and we got out the other day, and it got down to like 97.30, and then it shot back up to 110. You had a little downward action today. We're watching it, but silver won what was catching our eyes today.
You're totally in LinkedIn because I'm LinkedIn with you, Kavanaugh. That's insane. What are you talking about?
Yeah, I've got quite a few LinkedIn connections now. It's
I know. You wrote me a nice recommendation. I really appreciate it.
Awesome, and you as well.
Well, thank you.
Everyone reads those LinkedIn recommendations. Those are
huge. They're huge.
All right, and before Mark Jr. takes over the show, we're going to roll right into the odd block.
The Odd Block.
And welcome to the Odd Block. This is the portion of the show where we discuss the interesting and or the unusual options activity that is lighting up the tape today. And we're going to kick things off in keeping with our discussion of the precious metals with good old PAL, North American Palladium Limited.
Oh, yeah.
Good old PAL, as they call them, and they closed today $4.52, down 16 cents or about 3.5%. This is, as the name implies, a platinum and precious metals mining company. At one point today, they were up quite a bit. They were up nearly 7% to roughly close to $5 before the market turned south and Bernanke spooked everyone, and now they closed down on the day. But despite this downturn in the stock today, a lot of people coming in, a lot of bulls coming into PAL today. We saw about 2,000 of the AUG 5s going up for 38 cents right around the open. This is the name that does about 1,600 contracts a day, so that alone is more than the average volume for the entire day, just lighting up the AUG 5 strike. Obviously, these guys looking for an extended upside to about 540, 538 for these calls to break even. We also saw some longer-term bulls rolling out to September, where the SEP 5s, close to 1,000 of those are picked up as well for around 54 cents. This is a continuation of some bullish activity we saw earlier in the week when the AUG 4s and the AUG 5s were also drawing the interest of the bulls. We saw bulls coming in, picking up those, about 1,000 contracts each for 30 cents and 12 cents respectively. So a lot of bullish open interest coming into palladium right now. A lot of it definitely north of the 4 strike and a lot of it north of the 5 strike as well. So people looking for an extended upturn in palladium. Crazy Uncle Mike. I know regular non-crazy Uncle Mike. This is going to be confusing. He likes to talk up different metals names. Doesn't mention palladium too often. You guys playing in and around this one at all?
No, it hasn't really caught our eye. Now it kind of, looks interesting. I can honestly say I don't even know what palladium looks like.
It's a great cable channel if you like concerts. That's all I know about it.
Good old pal. Well, they also, in addition to the bullish activity, they were raised to outperform today.
By who?
RBC.
Oh, well, yeah.
Yeah. Well,
can't lose there.
Crazy Uncle Mike, you haven't been on the show long, but we do take a disparaging tone towards analysts here on this show. But nonetheless, that seems to be driving some of the bullish activity we're seeing in PAL today. Not surprisingly, the implied vol on this thing is up quite a bit to over 60% today as a result of all this buying activity on this very limited volume name. And then, of course, you can tell it's summertime because most of the unusual activity we're seeing is, a few thousand contracts there. Not the size stuff we're typically used to, unless you're talking about good old Virgin Media, ticker symbol VMED. They closed today at $27.68, down about a nickel. And this is a name that does about 1,800 contracts a day. They did 43,000 today. The bulk of that, 30,000 contracts in one size ratio call spread. And
yep, they did a 30,000 1 by 2, and then later in the day, somebody came in and bought some calls. I couldn't figure out what the deal was. It could be like the TiVo deal. Is it because that's the British Sky Broadcasting deal fell through? Is that positive for them? Are they a possible merger with BSD Sky, or maybe just people like that Richard Branson?
Could be. One thing I always, it's hard to define. You see a big lot go through. Like if we compare the two here, PAL versus VMED. The one thing I looked at real quick here, the short ratio on PAL was like 3.13. For all our listeners out there that don't know about that or don't care, what that basically means is for all the people that are holding the stock short or have a short position in the stock, it would take 3.13 days to unwind all the short positions based on the average trading volume. You look at VMED, and that short ratio is massive. It's 10.14. So if somebody comes in and does a 30,000 contract ratio spread, are they looking at protecting their short interest in the stock? I mean, that's the hard part to understand. We don't always know, what the action means.
That's one of the things, one of the difficult things of doing the old odd block and parsing any unusual options activities, that you really have no idea what the other side is up to. That's kind of what makes it so interesting and so fun, is trying to parse the tea leaves and see what the other guy is up to. But let's just clarify what happened today in VMED. We saw a trader coming in, picking up 10,000 of the Jan 2012 29 calls for $2.08, 212.5, and then sold 20,000 of the Jan 2012 33 calls for 77.5 cents. Obviously, he did these on splits on a ratio, and he did it 1 by 2, and the net premium worked out to 57.5 cents a contract. So, like we said, with Virgin hovering right here at the 27.5 range, this guy's looking for, near term for this thing to rise and probably hit out close to 30 for this guy to at very least break even on this deal. Of course, extended upside, it starts to look a little worse, but he's got some long gamma to cover him until he gets up to those short strikes. We talk a lot about how these things break even, but as we discuss also on the show quite a bit, the true devil is in the details of these positions, and the true devil here is how you manage this in terms of how this is actually going to pay off you. Obviously, if the stock keeps running, it turns into a pretty big loser, but you can have some ways to adjust this. But in terms of crazy Uncle Mike's question as to what this guy is up to, it looks like this guy's got a near-term bullish play. I don't see this as a defensive trade in any way to defend a long underlying position because he gets no real downside out of this whatsoever. He's initiating a longer-term upside bullish play where he thinks it's going to hover around the 30 handle, and then it depends. If it rallies beyond that, he has some management to offset those trades. Uncle Mike, you guys employ a lot of ratios over there. I know you like the covered call. You ever do the ratio covered call?
Yeah, what we do is, almost more of a stock repair strategy. We'll do a 1 by 2. Let's say you buy XYZ, the infamous XYZ stock at 50, and it goes down to 40. If we can do a low cost or a zero cost ratio spread where, you buy the 40 call to sell the 50, we've kind of given ourselves a steroid shot that if the stock gets back up to our original cost basis, we can break even on the stock that we purchased at 50, and then we'll get a little kicker from the 40, 50, 1 by 2.
That's a great way to manage that stuff. It's actually a good way of using collars together too. Is you set up a collar and then use instead of a straight short call, you can actually do the opposite, do like a short 1 by 2, so that if the stock really catches a move, you get your stock back. That's another play that I really like. So yeah, good stuff.
And so that's going to close out the old odd block and roll straight into Around the Block.
Around the Block.
And welcome to Around the Block. This is the portion of the show where we discuss what's coming up on our horizons for the next few sessions. And as we've discussed in the trading block and throughout most of this show and last show, there are a lot of macro concerns that are dominating most of what we're looking at these days, not the least of which being the current tumult over U.S. debt and whether or not that's going to be sorted out in a timely manner. And that, of course, is driving the market. We saw Bernanke today coming in and running off at the mouth and chopping the knees off at the market again. So a lot of people are really watching those macro developments as opposed to what we have coming up on the economic calendar. But there are some interesting developments next week where housing starts. A lot of people are starting to migrate towards the housing indicators more so than unemployment, more so than inflation as a way to really see what the economy is doing. They seem to really be moving the market. Are you guys, Uncle Mike or Crazy Uncle Mike, are you guys watching the old housing numbers more these days, housing starts and existing home sales and all that fun stuff?
We really haven't been, like, as a decision making, if it's part of our decision making tree, there really hasn't been that much change. I mean, the housing has continued to slip. There hasn't been, any good news from that. Looking at housing starts for a move in the market right now, I think it's kind of baked in. There's no real developments in housing. If you turn on the news, you just see people talking about, how I think year over year in Chicago, housing was down 15%. So the housing starts, if it's a good number, right now, what we're looking at is, the key levels on the S&P today was kind of a sell-off that took out the double bottom kind of formation in the last 2 days around that 1313 level. If housing comes out and, it's a positive and we rally off that, I'd almost think of, trying to sell into that rally just because it doesn't look like technically that this market wants to stay up right now.
No, it looks like it's getting dragged a little bit to the downside, and those like me may have been arguing that this has been long overdue, and this bounce we had from 12.5 back up to the 13.20, 13.30 range was kind of irrational exuberance, and now we're coming off that again. But if there is a significant bounce, it might be time to pick up some downside and turn to the short sides in your position. Of course, there are some other developments coming up on the horizon in the immediate near term. We have some earnings. It's earnings season again. Yay. We have some things to watch besides macroeconomic developments in Europe and the ongoing political nonsense that is our debt debate here in the States, where suddenly every party is the master of fiscal discipline and no one is to blame for any of the previous shortcomings that have happened here. But we do have earnings tomorrow, a big one, Citigroup, coming out before the open tomorrow, so hopefully you positioned already for it because it's a little bit too late now. You can trade the stock in the after hours, but that's pretty much it for Citi. But yeah, that might be an interesting mover tomorrow. Citi closed today at 39, roughly 39 change, down 45 cents, and this is one that's kind of suffered since they did the reverse split. We put on that, I believe it was June they did the reverse split. We put on the June 40 straddle at the time. That worked out fairly well because that thing has just moved quite a bit off that 40 handle since the reverse split, and the stock's just looked very weak since then. You guys active at all in Citi, crazy Uncle Mike?
No, we haven't been active in any of the financials really. That the regulatory environment is messing with the financials to the point where it's just no interest of ours whatsoever. A few years back, a guy named I think his last name is Greenblatt. Joel Greenblatt wrote a book called the Little Blue Book of Investing, and his first rule in the stock market is don't buy financial stocks. And we kind of take that same MO.
I like it.
We'll look at the XLF, and if it gives us a nice looking return on like a covered call or even a collar, you're kind of diversifying your choices of the financials. But Citigroup, when it did the reverse split, I think it was at $4. It goes to 40. It's a $3.90 stock, and even though it says it's 39, it's still a $3.90 stock. They haven't been able to turn that stock around. The Dodd-Frank regulation that's coming out or that got passed, people are still trying to figure out what that means for financials. And Citigroup doesn't get my blood going whatsoever. Blank face, I stare at a screen and look at a chart of Citigroup, and it doesn't stimulate any desire whatsoever to invest in the stock in any capacity.
It doesn't get your pinky going?
It doesn't get the pinky going. It won't bend the pinky back into place.
That could be the new indicator. If sometimes the old folks, their arthritis kicks up, they know a storm's coming. When your pinky starts throbbing when you're looking at a stock, that's when you want to get in.
Absolutely.
It could be the new CPI, the Kavanaugh Pinky Index.
There you go.
The Kavanaugh Pinky Indicator. Tusaw has his BBI, his bathroom break index. You can have your Kavanaugh Pinky Indicator. And speaking of Tusaw, I know the other name. He's not talking about silver. He's always going on and on about Apple. Of course, they have earnings coming up next Tuesday after the close. And you guys, I know, are pretty heavily invested in Apple. You've had a good run, 320 up to 360 almost at this point. Are you guys heavily collared again, or are you taking things off the table? What are you positioning for ahead of Apple earnings?
Yeah, we're still collared on Apple. We've got a front month collar. A lot of times we'll play, like with a modified collar where we'll go out longer in time on the put just to get long a little volatility, and we'll sell a front month or a 2 month out call. Right now we're collared front month. We're short the 370, long the 350. If it gets down to 350 tomorrow, we'll make an adjustment. But right now, fundamentally, Apple's still the darling in this market. It was down 25 cents today. The S&P's down 8.85. So it's still hanging in there. It'll be interesting to see if they can continue this momentum through their earnings. Apple's it really is the darling on Wall Street right now, though. They just keep printing money with these iPads, iPhones, anything. I'm waiting for Apple to roll out iHouse, where your house is just integrated with Apple products, because people just buy Apple. They buy Steve Jobs. They buy the story. They're not making computers anymore. They're a brand that just resonates coolness, and it just keeps popping. So.
Yeah, it's funny for a brand that is as old as Microsoft, and people think of Microsoft as this kind of stodgy old name in tech, and here's Apple almost has kind of reinvented itself as this young, hip, cool company when the thing's been around forever, 30,
it's been
close
around,
to 30 years.
It's just the genius of Steve Jobs. He gets, when he gets up in his black mock turtleneck T-shirt in front of the group at the announcements, he's just got an energy that bleeds and resonates the coolness that Apple is and has become as a brand. They used to be called Apple Computers. Now they're just called Apple. And
yeah, they changed that a couple of years ago because they're not. People don't go to them for computers anymore. They go for all the mobile stuff first, and then the computers are an ancillary way. The mobile's almost like a gateway drug. They lure you in with the iPhone, like, oh, I need something to sync my iTunes on, sync my iPhone with. I'll get one of these MacBook Airs, and they go from there. They lure you down the dark side.
It's unbelievable. I've got a couple kids at home, and my 2-year-old knows how. My 2-year-old learned how to use my wife's iPhone by watching our 4-year-old. So she can unlock it. She can get the Angry Birds app going and play Angry Birds, and she's 2.
I hear you.
Insane.
Same thing with us. Yeah, my little guy, he's 2.5, and he'll just bust out my iPad whenever he can. I try to keep it hidden from him as much as possible, but he has rooted it out wherever I hide it. And he can fire it up. He can find whatever he wants on it. He can play multiple games. I saw him yesterday, surfing YouTube on it a little bit, like typing things in and saying he wanted Kung Fu Panda, and he was hitting buttons to trying to find it, and he found something similar to it. Given that he can't spell or read, I was amazed that he got that far. But it's amazing. That just shows how that interface is pretty much the new interface for that generation. They're going to grow up, mouse and keyboard is going to seem antiquated. If it's not touch, if it's not a direct type of UI, then they're just not going to want it. And Apple has just really hit that niche there and just really carved out a genius little spot for themselves. Or all these kids coming up, he'll come in my computer and he'll want to touch my monitor because he thinks that's how things go. Mouse and keyboard, what is that thing? So yeah, they've really carved out a nice little niche for them, and we'll see what happens. Obviously, looking pretty hefty. They've turned to the downside today. Apple closed down about 25 cents. Not a big move in Apple terms. And the Apple vol, not surprisingly, is inflated ahead of earnings, but it's still come off because the stock has had a substantial rally. So if you are looking to position for some long premium trades going into earnings, maybe some downside put spreads or some long iron condors to position on some movement ahead of earnings, then this may not be a bad level to do it at because they haven't seen a commensurate vol pop yet. If the market starts turning down ahead of earnings into Friday and Monday, they might turn down a little bit. We might see this vol pop. So it might be a good time now to position into earnings.
Talked about a lot there, and I could comment for days on what you said, but the interesting part, they're talking about record earnings across the board. Apple's not the United States government. Apple's not defaulting. Apple's making a brand basically that is positioned and centered on the tech movement, whether it's moving to a cloud or an app, whatever it is. Apple's centered there extremely well, and they're making money. The market's, seen some turmoil here of the last 3 days just from the idea that, this debt ceiling argument going on. But really, does that affect Apple? If Apple's cranking out iPads and iPhones and selling iTunes, does that hurt Apple?
That's a good argument then, because we had some guys from NASDAQ on the show a month or two ago talking about their new alpha indices. Have you seen these?
I have not.
This gets into exactly what you're talking about. One of their primary products, the ticker symbol, is A versus SPY. So essentially, it's Apple versus the S&P. So if you think Apple's going to dramatically outperform the S&P or underperform the S&P, you can trade just that differential through their tickers. And they're pretty new products. They're relatively light in terms of volume. Let me pull it up right here. AVSPY is the ticker symbol, and we'll see what kind of volume they did today. Yeah, they did no volume today on AVSPY. But it is an interesting product if you can kind of work your order and get a decent fill. Obviously, it's going to be a little wide because these products are thin. But you're talking about Apple outperforming and underperforming the S&P, and whether these developments in the broad market, whether the U.S. defaulting really should even impact that much on Apple. Of course, they are a pretty heavy importer, so that might come into play with them a little bit there in terms of currency risk. But other than that, I agree. They are relatively a standalone nation almost. They have $80 billion in cash that they're sitting on as a pretty good shield against any kind of downturn in the market. So maybe it would be a good play, instead of doing Apple outright, you want to pick up some of these AVSPY calls or a vertical call spread to play on Apple continually outperforming the S&P.
What would really interest me would be the Apple versus USG, the U.S. government, because across the board, it's not just Apple. I mean, these corporations are making money. They've cut the fat where they've needed to. They're adjusting. They're more decisive, and they're quick when they make decisions at a high level and they have to implement strategy through a large company like Apple or even like GE. They move quicker and more efficiently than the United States government. So, after 2008, these corporations said, hey, this downturn in the market, it's exposed us to, debt problems in the company, overpaid salaries, employee benefits, whatever it is, and the companies go in and they cut the fat fairly quickly and efficiently. The U.S. government, however, we're about 3 years into this post-2008 crash, and we're still talking about debt ceilings. It should have been addressed on September 16th of 2008. Hey, if the market crashes, we're going to be looking at this debt. We're going to need to spend. So we're going to need to, we're going to need to do this quantitative easing. At the same time, we need to be looking at, spending cuts and tax increases to get us out of this hole. And they're the oil tanker in the middle of the ocean that takes 40 days to turn around. And these corporations are like speedboats that are making, the adjustments and efficiently and quickly. And really, you look across the board, not just Apple, but companies that are producing products that they're making money. They're making more money than they've ever made. And how do you compare that to the government and the debt ceiling and everything? I don't know the real answers, but part of me is mixed on, is the whole debt ceiling argument, U.S. government default, is that bearish for the market if the government shuts down for a few weeks? I don't know the answer. We'll see how it plays out.
Sounds like a debate we were having with Sebastian the other day, and he was espousing similar views, a very libertarian government, get the government out of the way type of view. I tend to lean that way myself, so I understand where you're coming from. I guess from a purely Darwinian market viewpoint, let's say the government does do their quote-unquote default, their quote-unquote shutdown. Obviously, dollar then in the toilet, so you're an Apple. You're sitting on $80 billion in cash, roughly, but at the same time, you're a very heavy importer. All of your products, the iPhones, the iPads, all those parts are all imported. So any sort of serious dollar drop is going to have a significant impact on your bottom line. You'd hope with that $80 billion in cash, they would devote some of that to hedging their currency risk, but you never know with these corporations. I'm continuously amazed at the level of stupidity we see on some of these broad corporations not hedging some of their obvious risk, even going so far as some of these airlines not hedging their oil risk, stupid things like that. Nevertheless, you can't assume anything, even with a company like Apple. So let's say dollar is in the toilet. Where are we looking at Apple then? We're looking at, 320 again, below 300. These guys are not really producing iPhones and MacBook Airs in Ohio in a little, a nice little shop.
That's true. No, and it's a good point. You're absolutely right. I mean, no company's immune, obviously, to anything that's going on, even if you have $80 billion in cash. In trading, I call them uh-ohs, like when something happens that you didn't know could happen and it forces you to lose money. I would assume a company like Apple has had some uh-ohs in the past, and they seem to be an efficiently run company that they would have made adjustments to those kind of blips in the past, so to speak. The concern with Apple is everybody long Apple, and at what point does Apple no longer become an attractive growth stock? For me, it's 320, a close below 320, and the inability to rise above 320 again. I start getting concerned. Every day it's below 320. If it gets down there, I'm starting to question, Apple's ability to out earn, so to speak, a U.S. government debt problem. But other than that, the butt hanging in the breeze risk of just going outright long Apple is something we're not interested in. We collar it, so I'm willing to put in a zero cost collar or something, a small debit collar that gives us some upside on Apple, because I think it's going to continue to perform.
Spoken truly like Uncle Mike, who is indeed an Apple devotee and an acolyte, if you will. He's sipped the Steve Jobs Kool-Aid. I think he likes it. And wherever he is right now in the mountains, his ears are burning, I'm sure.
Yeah. Well, it might even be something to do with the fact that Steve Jobs was an integral part of starting Pixar films, and we both have 2 young kids, and Toy Story is our favorite movie. So that might have something to do with it, too.
That could be, too. I've heard the stories of Steve Jobs takes a lot more credit for Pixar than perhaps he's actually due. He bought it, and he was kind of running it, but he wasn't really the guy who made it into what it is today. But we'll leave that for another show, the Steve Jobs debate show, which is what this show sometimes devolves into. It's so many people interested in and wanting to know more about Apple and trading Apple. It's just it's the new VIX in terms of what everyone wants to talk about it. Everyone wants to trade it. Crazy Uncle Mike, I'm glad you could join us on this truncated roundtable edition. It would have been a very slim show indeed if we didn't have you, and with Uncle Mike up in the woods, and with good old Greasy Meatball Seabass having to skip in and out, and of course the fire drill over at OX.
The infamous fire drill.
Leaving us shorthanded. So they say fire drill. I think it probably was just 2 Beer Friday over at OX or something along those lines, where the whole office just emptied out for free beer Thursday or something. I don't know what they do over there, but you leave it to Grigas to invent a fire drill on the day they have to come on the show.
It might have even been him pulling the fire alarm.
Yeah.
Who knows?
I've got nothing for the show today. Let me just hit this alarm here and see what happens.
What does this button do?
That is going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank our trooper-in-chief here, Crazy Uncle Mike Cavanaugh, for coming on the show. And why don't you give our listeners a little bit of an update on what to expect at Know Your Options Inc. in the coming week. I can think of one thing you may mention, but if there's anything else you have going on over there.
Yeah, well, we've got the continuous go to our website and click on the stopwatch, and we will do a full overhaul, 18-minute portfolio review. See how your portfolio is structured, if there's a need to institute any kind of hedges using options or futures, see what kind of fees you're paying. A lot of people don't even know what kind of fees are baked into their portfolio. So, give us 18 minutes, click on the stopwatch, go to our website. That's ongoing. We'll set up a one-on-one webinar, and, we'll talk out your portfolio with you to get you purring like a race car, so to speak. And then the event we're all waiting for, we're on the edge of our seats, is next Thursday at the Elephant and Castle, the Option Block 1-year live anniversary show. We're really excited and hope to see the thousands of listeners that we have show up and meet us face to face, and enjoy a nice day in a cold, dark basement of a bar.
What better place to be in July in Chicago than in the bowels of a pub, listening to a fine radio program. But we are indeed very excited about the upcoming live event. In fact, just yesterday we were assembling all of our equipment and testing it out and making sure that all of the bells and whistles will be working ahead of the live event, because this could be a very large turnout. Hopefully all of our thousands of fans will show up. Of course, if that is the case, then we rented out the wrong venue. We might have needed to pick the United Center as opposed to an adult beverage establishment. Yeah. But that we
might actually need elephants and a castle if all of our listeners show up.
Well, we'll just have a line waiting to get into the room, and we'll rotate people. You get 5 minutes of show, then you have to let the next person in. But
right.
He is, of course, talking about the live Option Block coming up next Thursday, July 21st, right here in Chicago at Elephant and Castle from 3:30 p.m. to 6:30 p.m. You will hopefully have seen already some ways to RSVP for that event. We have it on our Facebook page. Just go to facebook.com/optionsinsider. You'll see a link there to RSVP. If you're on Facebook, we've also sent out some evites. If you've gotten those, by all means, you can RSVP there. And we'll also be going out with our email, so you'll have a chance to subscribe in the newsletter tomorrow. And by all means, you don't have to RSVP to show up. By all means, you can just show up anytime you like. But it'd be nice to have some idea of how many people are going to show up so we can prepare the venue accordingly. And if you can't only make part of the show, still swing on by. That's why we made it 3 hours long, so we can accommodate everyone's various schedules, from the traders who get off the floor right around 3 o'clock, all to the people who are coming out of work at 5 and 5:30 and still want to swing down for the last hour of the show. There will be stuff going on for the entire 3 hours. There will be prizes and all sorts of fun things. And who knows what Crazy Uncle Mike and the other Uncle Mike will be saying or doing and giving away at the show. Have you narrowed down your fun prizes yet, Uncle Mike?
Oh, we're getting there. We the RSVP will be helpful too, so we can know how many cupcakes Sebastian has to bake.
Oh yes, the homemade baked goods of Mark Sebastian are legend throughout Chicago.
And then just more of, what are we going to wear? Are we going to wear the green jumpsuits like last time, or what's going on? So we've got a lot of decisions to make going into the show.
I don't know. Since you've been on the show this week, we might have to set up a microphone for you now, so you can be on the panel as well next week. We'll see.
I would love it. Yeah, I would love to.
Or maybe you can share a mic with Uncle Mike, because we're getting low on mic space, so we have so many people coming on the show. You and Uncle Mike can share a mic and help us fill the 3 hours with all sorts of fun and interesting stuff. That is going to do it for the Option Block this week. I want to thank all of our listeners out there for downloading and streaming and subscribing to this show and propelling the Options Insider Radio Network into the rarefied strata of the top 20 business programs on iTunes. That was quite a feather in our cap last week, or this week actually, when we checked their ratings, and sure enough, there we were up there with all the CNBC heavily promoted video stuff. So it's nice to see that the audience is responding to what we're doing. We have more interesting shows coming up for you very soon. You'll have more ways to find them and subscribe to them as well. So a lot of fun stuff coming up. But by all means, check out the live show next week. And even before then, we will see you again right here on Tuesday, right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.